One of my favorite loan programs to guide buyers like yourself through when purchasing a home is the USDA Rural Development Loan. This loan allows you to purchase any house you want in a qualifying area with no down payment. It's 100% financed, so you may be able to get a home a lot quicker because you're not having to save up those extra funds. My name is Nicole Nark. I'm a realtor in Central Arkansas, and today I want to walk through the new criteria for 2020 when it comes to the USDA Rural Development Loan, and then also share some tips with you that I've learned along the way helping many rural development home buyers with the loan and kind of the ins and outs and things that you may run into if you're not careful. The first thing that many home buyers like yourself may not realize is that there's actually two different ways that you can get approved for the Rural Development Loan. One of them is the USDA Direct Home Loan for single family houses. And what this means is that you are going through the loan process directly through USDA. So you may have a contact at your state's USDA office, and that is going to be your lender. Now, you do not have to go through USDA to get the USDA Rural Development Loan. There is a guaranteed program. That's the second type and way that you can get qualified. Now, with the guarantee program, you can use pretty much any lender that you want. There are several lenders across the country that are basically teamed up with USDA, but they are local lenders in your area. Now, I have personally helped buyers who go through both the direct and the guaranteed USDA loan programs. There are advantages to both. If you go directly through USDA, they can be a little bit more lenient on your credit score and your income. So if you have a lower credit score, you may be able to get approved through USDA directly for the Rural Development Loan. Now, the disadvantage with going through the direct program is that you are working with a government employee as your lender. So if you are out looking at houses in the evenings or on the weekends and you find the perfect house and you want to put in an offer, you're going to need a pre-approval letter from your lender with that offer amount on it to submit to the seller with your offer. Well, if it's an evening or the weekend, you probably won't be able to get a hold of that USDA lender who is a government employee. They're not going to give you their cell phone number. It'll just be a landline for their office. So that is where it can be beneficial to work with a local lender in your area, because most local lenders with banks are going to be more than happy to give you their cell phone number because they understand that you're going to be home shopping in the evenings and weekends. And sometimes, like right now when it's the spring and there's tons of activity in the local markets, you really need to jump on them fast and make an offer. So I always try to advise anyone who is considering the Rural Development Loan to consider those options, because I've seen it before where a buyer's walking through a home and you're falling in love with it and they decide it's the perfect time to make an offer, and then we can't reach the lender until potentially Monday and it's Friday evening. And in that time, someone could have come through with a pre-approval letter in hand and beat you out on that house. So that's why it is important and something that you could consider. But either way, you're essentially getting the same Rural Development Loan program. Now, the main limitation to using the Rural Development Loan, if there is one, is that you have to buy that house in a rural development qualifying area. Now, USDA typically defines a qualifying area as cities that have a population of less than 35,000. So if you live in a very rural area, you're probably going to be safe using this loan type. But I live in Little Rock, which is definitely a city. We have a large population here. But some of our suburbs as close as 10 minutes from where I live have a lower population, and people can buy there with the Rural Development Loan. So if you don't want to be on acres and acres and you prefer a more of a subdivision feel, there's still a potential for you to be able to use this loan type, and don't be scared by the rural terminology. Now, for information on which areas qualify in your state, I will leave several resources in the description box for this video where you can go and kind of put in different cities and view maps on which areas qualify and which ones do not. The next thing that I want to talk about is income limits. There is a cap on how much you can make and still qualify for the USDA Rural Development Loan, because this loan type is geared towards the low and moderate income earners. The 2020 guidelines that USDA put out says that you have to make no more than 115% of the median income in your area. What in the world does that mean? There's a tool that I will link in the description box where you can see for the number of individuals that will live in the home that you're considering buying and the county and city that you're in, what that income limit is. In my local market of Central Arkansas, with the increase that USDA just did for the income limit eligibility, for a family of 1 to 4 individuals, the maximum you can make is just over $90,000. But if you have a family of 5 to 8 individuals that will be living in the house, you can go up to $119,200 per the latest guidelines. Now, kind of a pro tip and an inside secret that I've learned along the way of helping buyers with this loan program is that things can get a little tricky when USDA looks at your income. Now, they do not only consider the income of like the primary borrower like some other loan types do, but anyone over the age of 18 who will live in the house and be making income will be contributing to that household income that has to be less than that 115% of the median income in your area. So that means if you have a boyfriend or girlfriend that they find out will be living in that house, they're gonna wanna count their income. If you have an 18-year-old that is still living in your house, maybe they have a job, their income will also be counted towards that total household income. So it's the household income that has to be below that percentage, not just the income of one individual. So that's one thing that I've seen trip people up, and it's not always explained on the front end. So that's one very important thing that is very specific to the Rural Development Loan. Lastly, I want to talk a little bit about credit score. Now, they do not define a definite minimum credit score that you must have in order to receive this loan. And like I said, if you go through the USDA Direct program and work with a USDA lender, they may be able to give you a little bit of wiggle room there if you have a lower score. However, they still do have an automated underwriting system, which basically is the automated system where when you give them all of your information to submit your application and they pull your credit, it's gonna run it through an automated system that's basically gonna be a pass-fail. It's gonna say, they have met certain requirements that we need to approve them, you're good to go, or it's gonna say, we are flagging this, we need an actual person to review this file. With the 2020 guidelines that are coming out, I'm hearing more and more that you need at least a 640 credit score in order to make it through that automated system without a manual review. So just automatically green light, you're good to go. If you have a lower score, that doesn't necessarily mean that you can't get the loan. It just does mean that you're going to be reviewed by a person and they're going to want more detail. Now, one of the things that I recently had one of my buyers go through is that manual review. And with the manual review, per the latest guidelines, you are going to have a credit history check for the latest 12 months. So they're going to want to see 12 months of your credit history, and they're gonna look at a minimum of 2 different credit accounts. So if you are still building up your credit, or you have iffy credit and that's why you got flagged, you really are gonna wanna work on boosting your scores before going through the application process for the USDA Rural Development Loan. So I hope you all found this short video on the USDA Rural Development Loan beneficial. I know that I've kind of learned some of these tricks and tips by just walking clients through the process of going through this loan and finding an eligible house in the past. Like I said, I have linked a ton of resources in the description box for this video, so make sure to check those out and leave any comments that you have in the comments section below. I check that frequently and I'm happy to help by either giving you some guidance, pointing you to resources, or connecting you to a realtor in your area who also has a lot of experience working with the Rural Development Loan. In the meantime, I hope you all are staying safe and happy house hunting.